Tom Lavecchia here with the latest edition of the Armchair MBA. I'm your host, Tom Lavecchia. I have a very special guest today, Jason Venturelli of JSV Capital, aka the Money Guy. Jason Venturelli, welcome to the Armchair MBA. How are you doing today?
I'm doing excellent, Tom. Thanks for having me again. Appreciate it.
So, as promised, I said we're going to do a whole bunch of different content. Tonight is educational, right? And we're going to look in ways to get money for your business. You know, you had the idea, you started your business, you started cooking, and then things started happening good, things started happening bad. But you find yourself needing money, having capital requirements, and that's what we're going to focus on today. Basically, today, we're going to make it excuse proof. Let me clear that up. Excuse proof to get money for your business. All right, we're going to jump right in. We're doing kind of a old school webinar format. Hey, Amber, how are you? So Amber is also reach out to me. Tom in New Theory is going to reach out to me in regards to some business ideas. So again, you have the idea, you're set up, you have a business. We're going to jump right in. So Jason and I are going to be discussing, and Jason's going to take the lead, alternative financing for your small business. All right, Jason, take it away. What exactly is alternative lending?
So alternative lending is, simply put, when you cannot go the traditional route, such as, the depository banks, which are Wells Fargo, Chase, Bank of America, TD Bank, to name the big ones, and of course your local banks as well. Okay. So they have their traditional lending system. They all play by the similar rules. Their rates might be different, their terms might be different, but they all have the same underwriting policies. And when it comes to business lending, very low risk files. Okay. So when you're walking into the bank, you better be prepared with a 780, 750, maybe the lowest credit score, plus, to name a few things, 3 years in business, revenue, the type of industry you're in. They're going to look at high risk industries such as trucking or even the restaurant industry. They're going to look harder at. So that's traditional lending. So alternative lending is, there are lending institutions out there. Everybody thinks that you have to be a bank to be a lender. Banks do many different things. Okay, investments, they do banking. They're a depository institution. They have a savings account, checking account, and stuff like that. Lending institutions, the alternative lending side, there are lending institutions out there, big companies, okay, that actually only do lending. They only do mortgages, okay? They only do residential or commercial mortgages. They only do business lending. There are lending institutions that only do lending for people who are W-2 people and need a personal loan, okay? So there are many, actually think it's over 21,000 lending institutions in this country, all right? So it's not just banks. So alternative lending is going somewhere other than the traditional bank.
Yeah. Now, I if you watch the show, and we're going to get probably a lot of new people on this one, because we're going to promote it to more of a financial business audience, not just the usual crowd. If people think, right, I had at the time, I think I had like a 790 or 810 credit score. I had the money in the bank, but I needed for emergency. But I needed at the time $130,000 loan to acquire something, right, for business. Mm-hmm. And I went to TD Bank, and I'm talking stellar relationship. Branch managers know me by name, the two that I went to, and just a really good and strong relationship. I really thought I was going to just knock it out of the park. I just thought they were going to cut me a check and everything's good. They looked at me and said, listen, how quickly do you need this money? Well, I need it kind of 2-3 weeks. I said, listen, you know what? We're going to go ahead and only give you $80,000 because we don't have to go to, oh, wow, it's a nice bump. We're actually broadcasting in association with the Private Financial Network. It's a group that I can't say the brand name because I'm not authorized, but they sent it out amongst their associates who may become affiliates. Wow, nice bump, fantastic. Who may become affiliates of here. So Jason, they're not going to be able to respond to a lot of these people, but what they're going to be able to do is afterwards email me or reach out to that kind of stuff. So the group that's listening, again, we really appreciate it. It's kind of a one-way conversation, a one-way webinar. We're broadcasting to over 400 people, which is pretty neat. So to those in the audience that I know you can't respond, but the reason why this is so sensitive to me is very simple. Jesus Christ, 500 people. They literally, well, they sent it to 10,000 people. I guess a lot of people responded, so God bless. So to these people that are watching, they're like, well, wait a second. Why should we partner as an alternative lending affiliate? Why should we get involved, right? I myself had a great credit score. I went to the bank and they said, we're going to only give you $80,000, right? I needed another one. I needed another 50. I didn't have it. I needed another money to the bank, right? The other 50, I got it from an alternative lending source. I got it as a merchant cash advance, right? So it kind of opened my eyes. I kind of said, wait a second, you know what? Like I thought I'd be a desired person. Then I also needed money for real estate, which we'll talk about as well. Most of the people that are watching have a real estate background. We actually have some mortgage people. We have some real estate people as part of that business group and network. That's why this is kind of exciting. And the largest audience probably we've ever had. Unfortunately, they couldn't. The deal was they couldn't do it via StreamYard. They had to do it via their systems. We were broadcasting to over 500 homes, which is pretty cool. But anyway, with that being said, is I was going for a mortgage as well. And the guy looked at me at Santander and says, you know what, Tom, we're going to go ahead and do your loan, but the interest rate was way high. I said, well, what do you need from me? What's going on? He goes, well, can you get a job for 6 weeks and you get a W-2 for 6 weeks? And then you can maybe come back and then we can get it for you. So I was like, this is bullshit. So anyway, so I'm very sensitive to alternative funding. There's a huge need for it and it's very, very important. Okay. So let's talk about alternative lenders. Let's go there first.
Okay, so direct lenders and JSV Capital, that's who we work with, direct lenders. So everything's clear on the table here. JSV Capital is a true brokerage house, okay? So we work with the direct lenders and we also work with banks as well. But on the alternative lending space, which we're talking about tonight, we work with the lending institutions who underwrite your file and it's their money that they're lending out to you, okay? So we are a true brokerage and we look for the best possible situation for you. Some people have a low credit score, we can help you out. And we'll put you with those lenders who work with people with low credit scores. Yeah. Some people have a mid-range, risk, they call it, a credit profile. And we have lenders for you as well. And then we have the low risks, people who have a 750 credit score, 800 credit score. And we have lenders in our network that we can partner you up with. So we take your file and we partner you up with those lending institutions. So direct private lenders, okay, so these are the people that we work with. It's their capital. They do the underwriting. It's their money. They give you the lines of credit, which we'll get into. They give you the cash advance, which we'll get into. And then next on the table is the marketplace lenders. Think of the angel investors, okay? That's where you go out and you're saying, hey, listen, I have an idea or I have a business, and let's keep this business oriented. Obviously, you can do other things with that. But for businesses, you say, listen, this is what I'm running right now. This is what I have on the table. This is what I'd like to do to expand my business. And you go to angel investors. These are people who have money they want to put somewhere. They want, a nice return on their money, obviously higher than traditional banking interest rates. That's why you're going to private investors because they're going to charge a little more, but it's going to be a little more easier to get they don't have rules and regulations to go by. It's their money and they can lend out to whoever they choose to lend out to. And then the next one we have the crowdfunding platform. And that's where you can, exactly do the same thing. You can get a bunch of people to put in a little bit of an investment, 2,000 from this person, 3,000 from this person, 10,000 from this person. And you can just get a bunch of investors with little risk on their part, not as much risk as the angel investor, like we just spoke about. So the crowdfunding, you'll get many smaller size investments. But you might be able to reach it easier that way because you're not asking one person or just two people for that large investment. So if you maybe need 20,000, you can get 10 people at 2,000 a piece for the crowdfunding portion. For the other one that we spoke about, the angel investor, where you're getting one or two investors who are going to give you a large portion of that money.
All right. Now that we know who the alternative lenders are, right? To kind of give the backdrop. And I just got a text for the guy that partnered with us on this stream. The big numbers are actually coming from Facebook. They're broadcasting it to their group, and I guess those numbers count for the StreamYard. I didn't know that. So you know what? We're going to start broadcasting more to other venues outside of YouTube. So that's fantastic. All right. So let's continue. Okay. So we're going to get into the types, right? We're going to go top line here. The whole idea is to just kind of say, hey, Coach Train, BK. I know Amber has some ideas. Hey, you know what? Let's go top line, and we're going to review what makes sense for me, who needs money, right, for my business, and what will make sense. Okay. SBA loans, not as easy as you think, but once you walk through that, how they work.
Yeah, and again, everybody thinks it's easy. They because it's advertised everywhere. Okay, they see it on, they hear it on the radio, they see it on TV, they see it on Facebook or Google or what have you. SBA loans being advertised everywhere. Not as easy as you think. Do I tell everybody, listen, if you meet the criteria, first out, find what the criteria is. And of course, this is what a broker is for. We will tell you exactly what you need to meet in order to get an SBA loan. Now, there's a couple of different types of SBA loans. We're not going to go through every one of them, but just to name two of them for this conversation. One of them is if you're already in business, okay, for 2 years, you have a 650 credit score, okay, you will qualify for SBA loan. That'll get your foot in the door. Of course, they're going to ask for, your revenue statements, everything that has to do with your business is going to ask for a lot of documentation. But once you get over that hurdle, you will qualify for an SBA loan if they see fit. Now, the second portion is called a startup loan. People who don't have a business can get an SBA loan. For that, you need a 680 credit score. Okay. Of course, you need a business plan, and you also have to have experience in that field. Okay. So for instance, if you want to be an auto mechanic, if you are an auto mechanic and you want to open up your own shop, great. But if you're, working at a hair salon and now you want a loan to open up a body shop, you're probably not going to get approved for an SBA loan. Okay. If you're a startup. So if you're a startup and you're looking for an SBA loan, you're going to have, experience in that field. Okay. So those are the two types of SBA loans.
Yeah. Now,
and one more thing, Tom, I'm sorry. One more thing. SBA loans are not government loans. People are fooled and they think that that's a government loan. It's not. So it's the bank's money, and the government is actually backing up a portion of that loan. Okay, so they're guaranteeing a portion of that loan. It's not the government handing you the money. You have to still go through a lending institution to get an SBA loan.
Okay. Now, really quick, and then we'll move on to the next. We got a lot to cover. I would categorize this as probably lower interest rates, better terms, right? But way hard to get. Way hard to get. So this is not for like the regular person. So this is more, again, hey, better rate, but much harder to get. Okay.
Correct.
Line of credit, how do they work?
And real quick, just to touch on that, I'm going to go over where you can get one loan first while you're waiting for an SBA loan, and then pay off that first loan with your SBA loan. And I'll talk to you about that strategy later on. But lines of credit, very simple. If you need, ongoing capital, if you're in the construction industry, to go back to that, and you need to buy supplies for your upcoming projects, and you pay off, that loan after, a line of credit is good for somebody like that, so you need to buy your supplies, whatever it is for that project. You're building a deck or an addition. Okay. Once the job is done, the customer pays you, you pay off that line of credit. Now you have that line of credit open again for you, and that revolves month to month. Okay. Now with lines of credit, okay, you still have to pay a monthly fee. Now, not all,
which is simply the interest and maybe some of the principal, right?
Correct. There are some programs out there. I know you're going to see advertising. There's no minimum fees. Trust me, when you get into it, they're going to find a way where there's going to be a fee. But either way, there is a minimum monthly that you have to pay every single month. And even those with lines of credit, again, going through a broker, we can help people who have 600 credit scores. I think we go down to a 550 credit scores on our line of credit. You walk into a traditional bank, you better walk in with a 780 credit score to get a line of credit. Right. And I know there might be people watching now. I have a 750, 720. But my point is, and you got one. My point is, you better have a very good credit score to get a line of credit if you go the traditional route. Come see your broker, and we can work you through that process with a not so attractive credit score.
And lines of credit can be elongated. Short-term loans. Talk to me about that.
Short-term loans. So I consider these loans anything less than 3 years. Okay. So, you come in, you want to borrow $100,000, you have a plan, don't take a short-term. First of all, don't take any loan unless you have a plan, but you only need the loan for a short amount of time. Short-term loans are easy to qualify for because mostly they're looking at the revenue that you have, not so much the credit score. They're going to look at your credit score to charge you the interest rate. Okay. But they're really going to look hard at the revenue. Okay. So they see that you have good revenue, good daily balances. Okay. You don't, make the money and take it out of the account right away. You have good daily balances. And these are going to be loans less than 3 years. And these are for people who want to, get inventory, sell the inventory quick, and, pay back that loan. Payroll, if they're behind on payroll, they just need a couple of, weeks or months to get back on track. So something comes up, unexpectedly, you have a pizza place and, your oven goes out. Okay. It's unexpected. You just need to buy a stove real quick so you can get back on track. So short-term loans for those situations, and they are higher interest rates, okay, but they are easy to qualify for, and you do get those loans within a few days.
Opposite of SBA, quicker cash, higher interest rate. So I think it's like the inverse.
Correct, and easy to qualify for.
All right, this is one that it's going to be important, right? You hear a lot about merchant cash advances. Walk us through that.
Okay, so merchant cash advance, it's right there in the title. Okay, you're a business owner, you're a merchant, and you're looking for a cash advance. So it is cash directly to your business account. You have to be a business owner in order to qualify for this. So what we do is we get you funding sometimes in the same day. We will qualify you and get you a real offer within 24 hours or less. If it's less than 24 hours and we get the documentation in, we can have you funded the same day. But let's be realistic. Most people take, a day or so to get the paperwork back to us. So we get you approved within 24 hours, and funding usually happens within a day or two after you get approved. But that is money directed into your account, and you can use that money for whatever needs it may be. So, if you need 50,000, you take 50,000 out. You can actually, pay for marketing. You can pay for inventory, payroll, expansion, pay off credit cards, whatever you may need to do with that money. But going back, this is similar to the short-term loans. Merchant cash advance, short-term loans, very similar. Now, we do have terms and rates accordingly that may be a little different, but the process is the same for merchant cash advance and short-term loans. Tom, you're muted.
Sorry about that. 'Cause I got the little one bopping around. What about MCAs kind of get a bad rap? I got an MCA. I think I had really good credit score, so that's what I want to qualify. And I paid 10%. And the terms were over 1 year, and they paid
Right.
me 2 weeks, right? Fixed. And then I think with that particular deal, and I don't want to suggest anything else, but I was able to pay it off early. And if I did, they gave me a break, whatever it was. But that's what I set up and negotiated up front, right? But MCAs, when I would go to my buddies, I'm like, hey, I'm going to get an MCA. I got to get an MCA. I kind of got a bad rap. Why is that, Jason?
Well, they are higher interest rates. Okay, I would say we start with merchant cash advance, start in the mid-teens.
Wow.
And go up to credit card interest rates. All right, but again, guys, consider what's happening with your searches. If you walk into your bank, okay, and your bank denies you, okay, well, now we have to look for other sources. All right. If you can't wait the 3-week process to get approved at the traditional bank, or you can't wait 30 to 60 days to actually get the money from your bank. So there are certain factors that come in play here. And once you get turned down, or you were in a stressful situation and you come to the alternative lending source and you qualify for a merchant cash advance, remember, you're a higher risk file. Higher risk files are going to be higher interest rate, and shorter terms for that matter. But yes, they are higher rates. It is cash. They are not looking for you to be in business for 2 years. They're not looking, they're looking for, the most 6 months of bank statements. They're not worried about your industry. You don't have to show us a profit and loss statement. You don't have to show your tax returns for the last 2 years for a merchant cash advance. Much, much easier to qualify for, faster to fund, and they do take riskier files for merchant cash advance. But I'll tell you, if you have a plan, taking out a merchant cash advance is not the worst thing in the world. Okay, if you plan to pay this money back in a certain time period, by all means. Sometimes merchant cash advances, and if we have time later on, I'll explain to you, merchant cash advance could be better than a traditional loan. People look at, the bank's charging me 7%. Well, how long are you going to pay that 7% off? If it's 7% on $100,000, okay, and you're going for a 7-year loan, well, you're paying $49,000 back. And there might be prepayment penalties as well. So you go, I'll just pay it off earlier. Well, there might be prepayment penalties. Now, if you take a merchant cash advance out, and it could be for 3 years, okay, and we do what's called a factor rate on a merchant cash advance. Let's say they charge you a 1.25 factor rate. Well, on that merchant cash advance, you're only going to pay $25,000 back. Yes, it's in 3 years, not 7. But if you're worried about how much the loan's going to cost you, well, then take the merchant cash advance. If you have a plan and you can pay it back in 3 years, you're only going to pay $25,000 back. On a traditional loan with a bank, and they're charging you 7%. Well, over the life of that loan, it's going to be $49,000. Okay, so it's best to talk to somebody such as JSV Capital and look at your options, because maybe in your scenario, your particular situation, a merchant cash advance might be better for you.
Invoice factoring.
Invoice factoring, yes. So that's when you have a bunch of invoices outstanding, okay, and you can't wait for that money to come in. You have bills to pay. You got to pay for your equipment. You got to pay your employees. You got to pay for your inventory. So we will come in. We will pay off, okay, those invoices, okay, and then we will get a percentage for doing that, okay, obviously. And it'll make your cash flow a lot better. So you don't have to wait for your vendors to pay you off the next 30 days or so. We'll pay your vendors, we'll pay you the 5th of every month, the 10th of every month. That money's going to be there in full. And then your vendors will pay us. And you don't have to worry about collecting within 30 days or however your billing period is. It could be 30 days. Some billing periods are 45 days, but you don't have to wait for that. And that's big. Maybe in the restaurant industry, in the trucking industry, some guys do jobs and they don't get paid till 4 weeks out. And maybe even the construction industry. So invoice factoring, definitely the way to go if you're having cash flow issues.
And believe it or not, I hear when things are going well, when somebody's like, hey, we need a really big order, and you may have a relationship with your vendor, they might want to get paid ahead of time, but you have a big order from a big box store or a big customer, and it's going to be big money for you once everything is executed. I think factoring comes into play. Question from Amber: what's the average rate for trucking invoice factoring, or it matters on the factor effect? Correct?
Yeah, exactly. I really would hate to give out terms, and
can you give a range? I know. I hate doing that too, but just for those watching, just a range maybe
for the fee.
Yeah, the average rate for trucking invoice factoring.
The average rate, I would say the average rate starts at 5%.
Got it.
And goes from there. And again, it's not a long-term play if you don't want it to be. I mean, we could do invoice factoring for 90 days for you, for 3 months. And then you could say, hey, I'm good to go. Thanks for helping me out. I'm out of my cash flow problems. I can now start waiting for those invoices to come in when they normally come in. So it doesn't have to be a long-term play, guys.
Now, what about if you're in an asset-heavy business and you need a bridge loan and you're like, you know what? I want a short-term loan backed by an asset versus a credit score.
Yeah, and we do that. We have a particular product here at JSV Capital where if you're a business owner and maybe your revenue is not as strong Maybe you need 100,000, and you're, not even close to 100,000 a month in revenue. We can do an asset-based loan, a bridge loan, where we take, maybe you have equity in your home or in a piece of property somewhere other than your home, as a secondary home or investment property. And we can take that equity, and based off of that, we can give you a loan. Now, a bridge loan is really when you're going from deal to deal. It's a lot of it's done on real estate, okay, where you need the capital to buy another piece of property, and you just need that money, to purchase another piece of property. And so you're going to take your assets and base it off of that, and you're going to bridge that loan, right? And that's a short-term play.
Well, TT said people are always probably trying to get over on Jason. The nice thing about this is Jason has a whole back end team that underwrites all of this. So generally, it's one of those things that if you were like kind of a deadbeat or trying to game the system or play any games, 9.5 out of 10 times, it's caught by the underwriters.
Yeah, it is. And and just to add to that, people have sent in fraudulent statements. It happens. People try and get away with stuff like that. We catch it. And we turn it over to the proper people to handle that. So yeah, it does happen, unfortunately, but we have a strict underwriting, even though we're not strict with, hey, your credit score can be low, your revenue, this and that, and you don't have to show us your tax returns and all that stuff. We're going to make sure that you're, on the up and up when we're going to wire over to you $200,000, $300,000. We make sure it's your bank account, your social security, your EIN number, your business. We do our due diligence to make sure that, we're going to definitely get paid back. So we catch those who try to do that. And it has happened. All businesses and all industries have that issue.
All right. Equipment financing.
Very simple. It's in the title, equipment financing. A lot of landscaping, farming. Excavators are big. Excavators are big business. Like I said, the trucking, tractor trailers, but I just to name a few. I mean, this is for all industries, the hospitality, restaurant, construction, farming, landscaping, you name it. Even for like you have a limousine or a taxi service, and you want to buy, a fleet of cars or limousines or buses or whatever. So it goes on the list. But equipment financing is we will set you up to get you financed, have your equipment financed. And those rates, traditional rates, nothing extravagant, but you do, if it's strictly equipment financing, you're going to have above a 620 credit score, so you can't go into the 500s as we spoke with future cash advances.
Now, equipment financing also is backed by the asset. So obviously, God forbid, with the asset, but at least like you don't lose your shirt. Yeah,
right. And in some cases, we can do 100% up to that loan to value. Okay, in some cases, but yeah, equipment financing, and we got guys for everyone listening or watching. Equipment financing. We're going to go through a dealership. Okay. Unless, you have all the correct paperwork and you have pictures, I've had people, send me, they're buying a tractor, a piece of farming equipment, a tractor. And the thing has been sitting out in the back of somebody's barn for the last 20 years. It's rusted. It needs new tires. They're sending me pictures from their camera on their phone. And, those aren't the deals that we're looking for, guys. But, a true equipment financing deal, we're going to ask for the purchase invoice. Okay. It's going to have a serial number. If it's, on the road, we're going to see how many miles, the make, the model of the piece of equipment. So yeah, we're going to look to buy from a seller, a dealer, rather than just, you fell upon some equipment on eBay. That's really not what we're looking to do.
Okay. Now, this is something that I'm really excited about, and it's something I'm actually taking advantage of myself. Jason and I are working on a deal to buy a rental property, but I love this. So I want you to go through the commercial and real estate financing.
Yeah, great. And again, there's alternative ways to find funding, guys, and this is what this whole conversation is about. We just went over business financing. Now let's get into the real estate side. So a lot of people, they always dreamed of, hey, I want to invest in, I want to buy a 2-family, 3, 4, multi. I want to buy an apartment building, and it's possible, guys. It's finding the right deal. You find the right deal, and you can put something forward yourself. There are lenders out there willing to work with you. All right. So now what we do here at JSV Capital, we find alternative ways, or we are partnered with direct lenders. Okay. It's their money that they're willing to, I would say, charge a tad bit more on the interest rate. Not a lot, not a big spread from, the traditional lending like we spoke about. But their terms are a little bit loose, a little bit more looser. Okay. So
and there's some no docs.
Yeah. So when we say no docs, let me clarify that. You still have to produce documentation on certain things, but when we say no doc, we mean you don't have to verify your income. So somebody who makes $300,000 a year, or somebody who might be collecting Social Security at this point, or disability. Okay. So we can get you funding if you're looking to buy real estate. Now, there are certain hurdles. Now, if you're going to go no doc funding, well, you're going to have to put some money up yourself. So we're not going to look at your income or your tax returns. Okay, we don't care if you make $20,000 a year or $500,000 a year. But on a no doc investment property, we're going to ask that you put down 25%. Okay, and on commercial property, it's 30%, and on residential, it is 25%. So if you have the money sitting around and you want to buy a rental property, whether it be commercial or residential, we can help you out. Okay. And again, it doesn't matter. And we go down to a 600 credit score. All right. So 600 credit score on the investment properties, 25% down, and no doc loans. And that means no income verification. We do not look at your tax returns. We do not look at pay stubs. We don't care if you make $300,000 a year or you make $20,000 a year.
Now oh, sorry. Go ahead.
No, go ahead, Tom. Go ahead.
I'm saying, so we're kind of, the rubber meets the road, and if there's enough interest, email me, Tom and Theory. We'll get a group together, kind of do the math. Does it make sense, right? So if you have a rent roll of, let's say, making this up, of 10%, right? And you buy a $300,000 property, you're making $30,000. You would look at, great, you're going to put down 25%, which is, what is that, 75 grand? And you put down 75 grand, right? You pay off the other 225. You see what your mortgage is, right? And then you say, okay, taxes and insurance, maybe a little bit for maintenance, and then are you cash flow positive? And in some states where the market's not as high, or urban enterprise zone, or the rent rolls 8, 9, 10, 12%, if the numbers work, you can keep doing this and you can become really wealthy fairly quickly. And then if the house appreciates even better, and you decide to cash in, you could always sell them. And maybe, I don't know if you could do a 1031 exchange for commercial, but if it's a residential, you could do a 1031 exchange and then upgrade to a nice, beautiful home. Jason, interest rates on this, obviously, again, you're not going to commit, but what's a range of you've seen for these type of loans?
4 to 7% on these loans, which is not, again, we're talking investment property here. Okay. So 4 to 7% is definitely in the correct range for an investment property.
And I would treat it much differently. Set up an LLC. It's not a personal thing. Set up an LLC.
Right.
You get tax benefits of that and so forth. So
and I implore everybody, and everything that we're talking about, by all means, go the traditional banking route. Try and get an investment property. And I'm going to tell you, if you have some bumps in the road, maybe they're going to look at W-2s. They're going to look at tax returns. Yet, you know what? They're not going to ask for 25% down. Okay, they might not, but they're going to ask for something down. They're going to ask for 10% down or 15%. So if you're in that category, I'm not. And if you have a business, you have an LLC, you go traditional route, they're going to look for profit and loss statements and your tax returns as well. Okay, so sometimes for some people, 25% down is the way to go because they don't have to prove everything under the sun as far as income going the alternative route.
All right, so we'll be wrapping up soon.
Well, let me just go over 2 more things here, Tom. Yeah. The 1099 employee and the business owner.
Yeah.
So again, what we do here at JSV Capital, if you're a 1099 contractor, okay, you're not W-2, we can do refinancing, okay, and purchases for your personal. If you're purchasing a home for yourself or refinancing your own home, we can do that for 1099 contractors, and we can do it for business owners as well. Okay, a lot of business owners, whatever it may be, as far as paying themselves, and write-offs with their business and so forth. Okay, we can actually use your business revenue. Okay, you walk into a bank, they're going to look at what do you pay yourself as a W-2. I know you own the company. What does your tax return say as a W-2? What are you paying yourself? That can be compromised sometimes. So what we can do at JSV Capital is we can look at your business revenue and use your business revenue to get you approved for a refinance on your home or a purchase of a new home. And as well as if you're a 1099 or a business owner, we can look for ways to get you that investment property. In those ways, you won't have to put 25% down. Okay. You will have to show docs though, but it won't be as stringent as the traditional way of going that banking.
I got two questions. One from George. The Facebook group looked like there was huge numbers that dropped off. The good news is they weren't able to comment, but I did get one question from kind of their Anthony, who's the one who set up the group. But first is to George, and then I'll get to Anthony's question. Ask Jason, like a 40-year-old, say like a 40-year-old has been through the ringer, nasty divorce, etc., just kicked in the ass for a few years, bad credit, and now he's on the other side. What steps, should he take, right? Like, so for example, bad credit, nasty divorce, maybe he had some skirmishes with the law, just on paper, not like a good situation, but wants to get in the game, right? So to put himself in a position to possibly fund a startup business or a current business with the end game of purchasing apartment buildings and real estate. Like, let's focus on apartment and real estate. Does this plan here, the 25%, give us what they care about and give us what they don't care about?
Okay, so with going back to that plan, you have 25%. Great. Look at the property. Try and get it for a good deal. Okay. Get some equity to go into the deal. Okay. Yeah. The lender's going to look at that to be great on your behalf to get approved. And then other than that, just have over a 600 credit score. That's it. And honestly, it's that simple. Okay.
Well, Pat's saying have a little fun with it. Step one, get a job. So let's say, and I know George personally, but I'm going to talk about, let's say, somebody generic. If you've been through that, maybe you get like a job or you hustle, side hustle, Uber, whatever you do to start squirreling away money, get to like 35%, keep 10%. So you have some cash on hand for repairs and stuff, buy that property. And then if possible, if you're in the right area, try to keep it cash positive.
And right. Yeah. And here's another way, guys. Let's say you don't have a great credit score. Maybe there's somebody in your tight circle, I don't know, that does. You can form an LLC. It's for investment properties. You can use it's an LLC with their name in it and your name, and their credit score will show. They could have maybe a 650 credit score, a 700 credit score. You come with the cash, they come with the credit score, or you divvy up, however you divvy up the down payment, whatever it may be. But you don't have to go at it alone, is what I'm trying to say. So if you have a good friend, a cousin, a brother, or somebody you trust, you form an LLC. This way, both your names are in it, your company name, and you can use their credit and still be in it on the deal. And guys, once you do the one deal, once you do that first deal, I'm telling you, it's rinse and repeat. Yep. It's the first deal. It's going to be complicated. You not know what you're doing. Got to get everything together. You're trying to structure everything properly. Okay, don't overthink it because it's not that hard. But once you do that first deal, go to your next, because you know what? Cash out refi. You take that cash, you put it on the new property, and so forth. Rinse and repeat.
So, George,
definitely figure out your credit situation. That's important, guys.
Yeah, I want to answer George's question as well. So obviously, let's just say, sake of argument, you hustled, had a side hustle, put some money away, and then contact Jason, get your loan. Great, right? But the other part is you got to repair your credit, right? So there's a few things you got to do. I know there's a lot of credit repair agencies, and be careful. A lot of them are scams, to be honest with you. So it's very simple. Number one, if you have any debt on your credit cards, pay them down. You want to have a very low debt to what is that credit ratio, availability ratio. So for example, if you have 3 credit cards and they're 10,000 each and they're max, right? Work your ass off to pay them off. So now if you have 0 revolving debt and you have 30,000 in credit, don't cancel the cards. Keep the cards open. By keep the cards open, that's going to raise your credit score. So you're going to say, wow, you have available credit, right? You're going to have no debt. Number 2, if you made some late payments, write a letter to Mercedes or Dodge or whoever has your car. You know, some of us get overhead sometimes and you have a really expensive car and you miss a payment. So send them a letter, say, hey, could I have a mulligan on this one payment? Because I missed it this one time. You know, it was an administrative error, blah, 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 but I'm asking for a one, you know, please remove this one late payment. It might be multiple, you know, vendors. It might be a furniture company. It may be whatever it is, even a mortgage company. And by them removing that mulligan off of your credit report, you'll see your credit report still go very high. So there's ways to get your credit down, your debt down, and your credit up. And then that makes it easier for Jason to do his job. On a lot of the other stuff that we went through, and Jason will put his contact information below. He's always available to be reached out to. Even if you have questions for viewers, even if you don't need a loan or you're interested in a loan you want to acquire but are not ready yet, still reach out to Jason. He's a great resource. But a lot of it really matters on your credit score. So really focus on getting your credit score up. It's so invaluable. I know a lot of us are cash guys. I'm still a cash guy. I'll say, you know what, let me put on my credit card. Even though I don't carry a balance, it helps as well. So Jason, we're going to wrap this up. We're a little over. I want to do 40 minutes. We're a minute and a half over. I do have one question from the Facebook group. A lot of questions, but because they couldn't, for some reason, they don't have the same functionality as be on the comment like YouTube. Anthony sent over one question, and then he's going to email questions from the group. There's a lot of like real estate agents in his group, people that sell insurance, kind of like people that are independent contractors. Can I be an affiliate, or can I be a sales rep for you, an ISO, independent service provider, not 1099, because a lot of these are 1099ers according to Anthony. But how do I become an affiliate and sell these loans on behalf of JSV?
Very simple. You contact us via email. Tom will put our information down, or my direct email, or you can go to our website, fill out the form, and we'll discuss. But yeah, we're always looking for, you know, people who are looking to go out there, hustle, make deals happen. And yeah, you definitely become an affiliate, a broker of JSV Capital, and we'll definitely talk about your percentage that you get on these deals. Every deal closed, we pay out our brokers. So yeah, we can definitely discuss that, those who want to get involved.
Beautiful. So you can find Jason at jason@jsvcapital.com. I'm going to put his email. I'm also going to put his link, make that available. If you need to contact me, if you have any marketing questions or business questions, Tom at New Theory. I want to appreciate again, Anthony, from the Facebook group of independent contractors. Again,
Thank you, Anthony.
I couldn't say the name he's affiliated with. It's a long story. It didn't get the legal hurdles. So we had to really shot up on the numbers. And then unfortunately, I don't know if it's a tech thing with Facebook, or maybe people just watched and wasn't a cup of tea. But nevertheless, I appreciate it for the Facebookers that are still on. I appreciate for our people on YouTube. Big Bones, how are you? Thank you for being here. As I said, the Armchair MBA is about giving you all types of content. I want to make you guys money. I want to show you guys how to keep money. I want to show you how to invest money. And I think JSV Capital is a great way to get funding for your business. So Jason, I'll give you the final words.
Yeah, guys. So one thing I want to final thought here, it is no cost to work with JSV Capital. If you're a business owner, you're looking to get into real estate, we do not charge you any upfront fees, no back-end fees, no application fees, okay? We get referral fees from our lenders. That's how we get paid. I know everybody's like, well, how do you get paid? Well, I just told you how we get paid. The lenders are happy that we bring them deals, okay? They're making money off the deal by charging the interest rates, and they're happy to give us a referral fee for doing so. And that goes with our real estate deals, commercial, residential, and that goes for our business loans as well. Okay, guys? So it's no fees to work with us if you have a deal, or I'm sorry, if you're looking to get money through a business loan or real estate. So no fees up front, no back-end fees, no success fees, whatever that may be. All right, guys? But definitely get in touch with me. Visit our website. Check us out. Email me. I'll be happy to answer any of your questions. Even if you don't have a deal, if you're just drumming something around that you think you might have, email me. I'll be happy to answer any of your questions. I'm always here to help. And if you guys want to become affiliates, brokers with JSV Capital, reach out to us, and we can definitely discuss that into further detail. But anyway, thanks, guys, for watching. Thanks, Tom, for having me. I appreciate it.